Good afternoon. You're watching BloombergQuint Live. I'm Alex Matthew. Here are the headlines. It's a steady day of trade as the Nifty hovers just above the 10,200 mark. Metals and PSU banking stocks lead the gains. A one-time exceptional gain bolsters Zee Entertainment's performance in Q2. The stock surges post the announcement. HDFC Bank, Asian Paints, Infosys and Ambuja Cement are the other Nifty companies that are yet to report their numbers today. And construction stocks are buzzing in trade after reports that the cabinet may make a major announcement relating to the sector this evening. And with that, it's over to Darshan Mehta for Hot Money.
Thanks, Alex. Welcome to Hot Money on BloombergQuint. Before we move on to Hot Money, Zee Entertainment has come out with its second quarter numbers. Yatin is joining us with all the details. At this point of time, Yatin, it seems like it's slightly better because the margins have come in at 31% versus 30%. And profits, if you remove the exceptional, is at almost 350 crores versus 320 crores. What are you making of the numbers?
Darshan, if you look at the overall numbers, largely in line with expectations. Now, if you look at the margins and the EBITDA number, on an overall basis, the EBITDA is just higher by nearly 20 crores versus what the Bloomberg poll was showing up. Of course, on an operating front, versus the estimates of 30%, they have shown a margin of 31%. But there is a one-time gain of close to 130 crores because of the sale of the sports business, and that is what is pushing up the overall profitability for Zee. Of course, if you look at the subscription revenue and the overall ad revenues, they have been largely in line with street expectations, showing a high double-digit growth. So if you look at the overall numbers, they have been healthy. Of course, there is some bit of impact because of GST transition, wherein a lot of advertisement revenues were slowing down for most of these broadcasting companies. But overall basis, the number is healthy. Management commentary will be quite important to watch out for.
Okay, many thanks, Yatin, for all the views that you gave up on Zee Entertainment. Let's move on to Hot Money. These are the stocks. Joining us on the show today is Umesh Mehta of Samco Security, and he believes that the markets are in a correction mode. Independent market expert Dharmesh Kant is bullish on the markets. He believes that it's trading at a long-term average valuation, which is far away from being stretched. Lancelot Diguna of ValueX says the markets are likely to remain range-bound with a downward bias. So this is what our guests believe. These are the stocks that we'll discuss on Hot Money today. Sunteck Realty, which was buzzing significantly, Havells, Wockhardt, Kaveri Seed, and a niche play, BLS International. Let's talk about the first stock, and that is Sunteck Realty. The counter was up almost 20% in trade yesterday after market hours. News came out in the bulk deals that it was Fidelity which had bought in almost 2.4% stake in the company. It's been a marked outperformer, moved up significantly. It's up almost 250% on a year-to-date basis. What should one do with this counter now? Let's ask our guest. Umesh, I'll start with you. Any view on Sunteck Realty?
So I think Sunteck Realty is a play in Mumbai market, and it's a catch-up story. In fact, Oberoi Realty is also into this play, but Oberoi is a large player, and Oberoi is considering the valuation. I think Sunteck is still available at 35 to 40% discount to Oberoi. So I think that's in principle how the market is responding to the price action. Number one. The other part is they are the projects in BKC is on the verge of getting completed, and the Goregaon project, which is the 23-acre township, I think they will generate cash flow in next 2 to 3 years from that. So I think that visibility makes a stock medium-term buy, but from long-term perspective, focus only in Mumbai. I think that's how, and in premium category. So that's how a proper diversification of a basket is required in order to have a sustainable long-term growth for the company. But yes, in the medium term, yes, cash flows, a lot of visibility is there in the cash flow and profitability and growth in fact. So I think it makes sense.
Yeah. So it's moved up 250% already this year. It's moving up significantly, and the management has now said that it will go in for affordable housing, mid-income housing. That is what they said. So still, do you think that there is room for the company to grow more, or will the margins be able to be sustained at the levels which a premium housing developer will do, something like what an Oberoi does?
Correct. So the price rise is in conjunction with the increase in profitability that the company have shown. So that's number one. But going into a middle income category, affordable housing, Whether margins, that's a big doubt, whether they will really be able to sustain margin, they will have to work on wafer thin margins. So all those things, going from a premium category to affordable housing sector, it is good to tell on papers. But when it is actually done, only time will decide, how they will be able to match complete different platforms.
Dharmesh, you have a view on Sunteck Realty?
Yeah, Darshan, I don't think, realty stocks are anyways, long-term wealth creator. You can have a trading pop-ups in between. You can have phases of where a huge correction has happened and then this type of a move is there. But if you look at 2010, this same stock was quoting at 700 and where it is now. So in 8 to 10 years time frame, you are not able, get back your returns as far as. And this affordable housing and all is, concept which is doing the theme around. But I think it's a fancy idea. Because first you will be losing on the margins which you were having, and last 2 quarters have been bad for Sunteck Realty as far as the profitability is concerned. Yes. It's just that some placements and news flow surrounding that the stock has shot up, but I doubt and I don't think one should be an investor in any of the realty stocks.
Okay.
So realty is far from being an investor. Builders can make money, they will continue to make money, but whether shareholders, as a shareholder after 5 years, 6 years down the line, you will make money. I doubt that. So trading play fine, but one should not be an investor in any of the realty stocks. Not only Sunteck.
Okay. Lancelot, Umesh is bullish on Sunteck. He believes here Dharmesh has a quite opposite view. Which side of the argument are you on?
I am a bit neutral because mainly because the valuations have again gone up. The stock has rallied from almost 225, to around 370 at this level. So we are seeing, a fair pricing in of the upside that is there. And given that, if you look at it from a fundamental perspective, Sunteck is one of the better players in the domestic market in terms of its management of its debt. It has only about 845 crores of net debt. So they are a powerful or a good player. They've made some very smart investments in the past, which is focused at BKC and Goregaon. And they are in the stage when they are monetizing those investments. But new investments which are in the space of middle income or the middle level and how those will play out, I think is a big question mark, given that the whole industry is undergoing a lot of stress and these are longer term cycles. So this cycle may continue for at least 3 to 5 years. So at this point in time, I think the share is fully priced, so one should maybe stay out.
Does a big fund like Fidelity buying in close to almost 3% stake in the company give should that give confidence to a retail shareholder to enter into a Sunteck Realty?
I think maybe the institutional investors look at this a little bit more differently and maybe over a longer time horizon. Like I said, real estate cycles are much longer, and we could see Sunteck taking advantage of a bottoming out of the real estate space. And it could give returns, but if you have to be patient and wait for another 3 to 5 years, so there are better opportunities in the market at this point in time, rather than trying to buy in this, because it's not offering the deep value that one can expect at this point in time. Maybe at 225, 230 levels, it would have offered that deep value.
Okay, so that's the view that's coming in on Sunteck Realty. Umesh is bullish on Sunteck Realty, but the other two guests seem to disagree. They are rather neutral. Dharmesh is saying stay away from the real estate sector, while Lancelot believes that at a lower price it will offer value. At this point of time, it's fully valued. Let's talk about a buzzing stock on the downside today. Havells came out with numbers yesterday. Muted set of numbers that were there, but the management commentary was rather weak. They are seeing issues that are there as far as demand is concerned. Even the top line miss was there. The margins were elevated given the fact that there was an inventory in the cables and wires business. So what should one do with Havells now? Is Havells still the best play in the consumer durable? Should they switch to some other play? Let's ask our guest. Let me start with you, Lancelot. Havells, do you have any view?
Yes, I'm pretty bullish in the long term on this company, because I believe that the two major drivers for Havells, one is the consumer durable business, which is a $15 billion business, and they have recently acquired Lloyd, so it will take some time for them to really push growth in that segment and benefit from synergies. The other is the building material segment. The building material segment is the cables and the wires and switches, which they are also a significant player. So I think these two segments are going to see phenomenal growth over the next 3 to 5 years. And some of that growth is going to be captured by Havells.
No, but they themselves were rather muted as far as their commentary is concerned. And are you happy with the 40-time valuation for a company which in the next probably in few quarters will not grow?
See, when you look at it from a valuation perspective, when you look at it from a valuation perspective, you also got to understand that at this point in time, there are a lot of these consumer durable companies are trading at high valuations. So when you compare them with their peers, you are trading at high valuations. So one shouldn't get too much perturbed about the valuation if your investment horizon is for the next 3 to 5 years.
Okay. Dharmesh, do you like Havells? Do you have a view on Havells?
Yeah, definitely. One should be a buy in Havells from a long-term perspective because consumer theme is going to play out in India in a big way. So we have hardly scratched the surface as far as consumer durables consumption is concerned, white goods are concerned, and Havells now has a basket of all into its own. So earlier, like white goods was not there; it was mainly into electrical appliances. Now even that is there in the kitty. Management has been candid and it's good of management that they have guided lower, so one should not be carried away. From a short-term perspective, like traders and short-term cycle players, they get carried away, and Havells has shot up a bit. As far as valuations are concerned, see, consumer play as a theme has always traded at a higher PE multiples of 40-45 in the range, and that is where Havells has been trading. Company is good, balance sheet is strong, and with Lloyd Electric coming into the kitty, I think there's a lot much room to play out. And not to forget, economic cycle is just on the mend, it's on the uptrend. The income levels have gone up, housing as a space has been doing well. So all these houses which will come up, they will need electrical appliances, lights, fittings, fans, everything would be required, and Havells is a good player, niche player out there. Then upgradation is there, you upgrade to a better quality from say 1,000 rupees a fan to 4,000 rupees a fan. So there Havells again is a niche and a better player. So I think all the positives are working for Havells. Valuations will look expensive to you, but that is the story with the consumption play if you have to be in India. So I would be a buy in Havells. 2-3 years down the line, 40-50% kind of a return on the stock price is very visible.
Do you think they'll be able to turn around Lloyd?
Yeah, definitely. Because if you see the numbers this time around with GST and everything, playing it out in a big way, still Lloyd's numbers were good. So that's a positive, and Havells has a management. So a tried and tested management is there in the same field. They have worked out well. So they have a history of a profitable and a good trajectory and turning around.
But they
the
weren't
businesses.
able to turn around Sylvania. They had to ultimately sell it out.
Yeah. Sylvania was, I think, a bad deal which went wrong with them. But let's give management their own credits. So I think Lloyd should be a turnaround story for Havells. And see, the beauty of Lloyd acquisition is they have not acquired the assets. They have acquired the brand. So the manufacturing still stays with the Lloyd, and it's like a share deal. It was there, so there was no stress on the balance sheet as well. So they played it smart as far as Lloyd acquisition is concerned.
Okay, so it's a 2 thumbs up for Havells. Umesh, do you have a view? Do you agree with them, or you have a different view on Havells?
So I agree with them on one aspect that yes, this is a play for next 3 to 5 years. This is fully priced stock in terms of trailing valuation is at 60 times. 60 times, is a valuation that we give for staples, where the velocity of purchase is very fast. In Havells, the velocity of purchase is maybe once a 5 years, I will go out and purchase electrical, the bouquet that they offer. So I think if that is the case, then and giving a valuation such high for a growth that market that they expect to grow in next is around 10 to 15% year on year. So if that is the growth expectation that they have, and the ROE is around 15-16%, yes, they will improve something on margins considering their capability to scale it up. But overall, on in balance, if we have an option, I think Havells is at a rich valuation. So ultimately, as an investor, whether we have better options or to invest in this, I think so there is no margin of safety. Yes, for stable, consistent return for a long-term portfolio investor, company has strong brands, they have a complete bouquet of services. So to that extent, the risks are limited. Slow and steady returns are possible, but from a medium-term perspective, I think it's time to wait for a decent correction. This does not make sense to enter at this high valuation. So medium-term avoid, ultra long-term, yes, this is a good stock.
So if not Havells, what other option would you suggest in the consumer durable space? Because
Correct.
the Havells is the largest. If not Havells, what is trading at a decent valuation that investors can look at?
Correct. So I think Volta's air-conditioned market, which they have a really strong forte, and that is available at around 50% discount to Havells. And we have Voltas is a focused play, and they are also expanding into other products. But considering the untapped potential of air conditions, so I think that's huge potential. So Havells is a generic play across all platforms. They offer from switchgear to wires to lighting, home appliances. But Voltas is focused and available at around 33 times, and Havells at 60 times trailing. So ultimately, as an investor, whatever is beneficial to me on ROE, so that's more beneficial. So that's how we see Voltas avoid from medium-term perspective.
Okay, so that's the view that's coming in on Havells. Both Dharmesh and Lancelot are bullish on Havells. Umesh says that for a long-term perspective, yes, Havells is a good bet, but for a shorter perspective, it's better to switch to something like a Voltas, which has most of a focused area. Now, let's move on to the third stock, and that is Wockhardt. The stock hasn't done much yet. Most of the pharma stocks have managed to rebound from the lows. Is there more room for Wockhardt? Is there more downside that is there for Wockhardt, or should now one start accumulating? Let me start with Dharmesh. Let me start with you, Wockhardt. Everyone has rebounded, but Wockhardt seems to be pretty much at that level. Do you have the confidence, or should investors buy this stock as, is there more downside possible in Wockhardt now?
Yeah, downsides are possible in Wockhardt. In fact, the entire pharma space I am not very comfortable with. The primary reasons being all the 3-4 key points. Point A is the pricing pressure will continue to be on the pharma space. Point B is, with channel consolidation happening in US, so all the discounts which they used to have from all the dealers out there in US will no longer be there. Thirdly, as more and more generic play comes into the off-patent medicines which comes to the generic board, so you will have more and more competition stiffening. Fourth, US regulatory overhang continues still. You have periods when good news flows are there, but again, 1483 observation push you down 1 year down the line. So that's the problem.
But for Wockhardt, everything is down. Everything is down. So the only, is there potential? What I'm asking, is there potential? So let's say if one of their plants get cleared or whatever, I'm asking, is there more downside for Wockhardt that is possible?
See, you are betting, it's like a probability scenario which we are doing. If the plant gets a clearance, then they will be able to sell medicine. Even if the plant gets a clearance, it takes 6 months to 1 year time to get the medicines on the market, and then the competition is already there. The other players have captured that market. So to get a penetration there would be a tough thing. And 50% of the Indian pharma industry is in the same phase.
Okay.
So I don't think one should be a buy in Wockhardt. Let good news come first.
Okay.
Let 5-10% go off the table.
Okay.
That's not a problem. But be more surer while entering into a pharma space.
Do you agree, Umesh, on Wockhardt?
So yes, there are issues, but I think Wockhardt is into a different set of problems. 38% of the volume is coming from Indian market, and Indian market is growing at around 13 to 15%, but Wockhardt is growing at around 6%. So there is something wrong structurally in Wockhardt if they are not able to capture Indian market, which is their forte and which was their forte for years. Then I think there is a serious problem. Number two, government is considering to bring all non-essential drugs also into the price regulation. So I think that's the biggest risk for the entire Indian pharma space. I remember in 2003 Supreme Court 11-judge constitution bench had given a judgment on education, right? So earlier government used to have control over the fees that education institution used to charge, and that control really stifled innovation, stifled quality. So I think that same thing is going to happen in pharma. If government tries to control the price of the end product, then I think the pharma is into a big problem. In fact, they should make a statement profiteering. They should not be allowed to profiteer. I think that's a major policy decision if the government has to do. But if they stick on bringing the final products into pricing control, then I think Indian pharma space is into a big problem. Companies will not come out with innovative products. So I think they will be choked to quality products, and growth will not come. So I think that's the biggest risk. And Wockhardt, yes, per se, if they are into 38% is in India, and within the Indian space they are growing at lesser than the average speed. I think turn around seldom turns, and that's a famous quote by Warren Buffett. So I think it's better to avoid Wockhardt. May not be, everything has been priced. It may not go down, but it may not go up also.
Okay, so 2 thumbs down on Wockhardt. Lancelot, agree, disagree?
Yeah, I think I would also agree that Wockhardt is not going to go anywhere, and if you have to invest in the pharma space, then there are better companies with reasonable valuations like Glenmark, Lupin, which offer better value at this kind of a price level. So considering that Wockhardt isn't among the top 3 players in the pharma space, it's better to avoid at this point in time and just stay off.
Okay, so it's a triple thumbs down that's coming in on Wockhardt. It's not going anywhere is the consensus view that our guests are giving at this point of time. Before we move on, here's a quick recap of all the guest view on the stocks that we've covered till now. Okay, the next stock that we'll discuss is Kaveri Seeds. From the recent bottom, the counter has managed to move close to 10%. It's a debt-free company, but the return ratios aren't the best currently. It has weak return ratio. There are issues as far as technology is concerned. There are a lot of regulatory issues as far as this space is concerned. What should one do with a stock like Kaveri Seed? Lancelot, I'll start with you. Kaveri Seeds, bullish, bearish, any view?
I am bullish on this company. I think the company is learning from its past issues that it has had. It has issues in terms of focus on completely on the almost 60 to 65% comes from the cotton seed space, and that has been an area of concern because every time there is a problem with the cotton prices and with the cotton markets, you have seen the price that impact their financial performance. I think the company is now moved into the vegetable seed space, and that is gaining momentum. We shall see probably good growth coming in from that space. And geographically also there's a diversification happening across different states. Earlier the concentration was basically in 2 states, and now it's getting divided across 4 or 5 states. So I think as the company really begins to, these initiatives begin to play out, we'll start seeing the results actually show up, and that should be positive for the company. So from a perspective that India is growing, agriculture is a space where this is a much needed technology. I think you will see this as a good pick at this point in time.
Do you agree, Umesh, with what Lancelot has said in terms of Kaveri?
Yeah, I think so. Kaveri is a bigger play in agriculture space. Government's plan to link the rivers, and I think that's going to create lakhs of hectares of land, which were hitherto not arable, will bring in the mainstream, agriculture, and that will create huge demand for agri and agri input companies. And I think companies like Kaveri Seed, yes, they will benefit. Kaveri is coming out from the past issues, that the company was facing. So let's give a chance, in terms of valuation is quite attractive, 20 times, and in fact entire agriculture sector we see a re-rating of the entire sector as a whole, given the government's Bima Fasal Yojana. I think so that will be the biggest trigger for agri input companies to really bank upon the growth. Actually the company is also diversified into vegetable seeds. So to give an example, if we want to grow a watermelon, 20,000 rupees a kilo is the seeds that the farmer has to buy with. So I think yes, it does a huge amount of it covers huge amount of acreage, but the reason the real foundation of seed company is very, very solid. Why? Because if you take another ordinary seed, if you put in the soil, it gets eaten away by pests. But seeds like when you buy seeds from companies like Kaveri Seed, that seed really sustains and that grows into a crop. So I think the foundation is clear. There is value the company is going to create. The research base that company is into, that there is a proper moat. Very limited companies are there in this space. And I think from a long-term perspective, Kaveri Seed is available at a reasonable valuation. We see re-rating of the entire agriculture space. Government's plan to push agriculture into a bigger domain, and the linking of the rivers. Though there are a lot of demand drivers. The company and therefore we see Kaveri as a value play from medium to long term perspective.
Dharmesh, 2 thumbs up. What's your view on Kaveri? Do you like
Yeah, I definitely like Kaveri Seeds. And see, hybrid seeds as a seed has always been in a problem area because of the concerns surrounding it. It's a pesticide and fungicides, protective seed, so that quality is not a natural seed which it produces. So that will persist. But like cotton, as Lance has already covered, 60% was there. It will come down to 50% with fall into the vegetable seeds, which is a high margin seed. Margin of safety is there. It's available at reasonable valuation. And earlier the problem was of inventory write-offs, which was happening in Kaveri Seeds. So I think that will slow down from here on. And EPS wise, I see 30-40% kind of a CAGR growth on earnings of Kaveri Seeds. So Yeah, thumbs up for me for a couple of.
Okay, so it's a triple thumbs up that's coming in for Kaveri Seeds from all our guests. And the final stock is a stock called BLS International. Basically deals with a lot of these visas and government contracts. Is it a niche play? It's a niche play, so it's time to bet in smaller companies like BLS. Earlier, GMO bought a substantial chunk in the company. So we'll ask our guest, Dharmesh, let me start with you. Are you bullish on BLS International and why?
Yeah, definitely. Yes, see, BLS International is a very niche player into processing of visas and government papers. Basically, these are all e-papers. Earlier, they were processing, only Indian government visas of 1.7 million per annum. They have got a Schengen visa for Spain, just a global visa.
Yes.
1.8 million is there. So 3.5 million will come from here. Punjab government e-governance contract they have backed, and it's a high entry barrier kind of a business. You need to have a track record to gain more access. Yeah. So as you know, digitization takes place, e-governance takes place. Companies like BLS will get business from the government of India as well. So a huge, I think cash flow will be there. It's a debt-free company. And if you look at the earnings trajectory in FY16, they reported a total profit of around 30 odd crores. FY17, which ended with 50 odd crores.
Okay.
FY18 first quarter, they have reported 29 crores. So I expect it
also
to, I expect it to go to 120 odd crores by this year end, and then to 150 odd crores.
So that's a thumbs up. Umesh, we are running out of time, so very quickly your view on BLS.
I think so. Company has a 5-year track record of profitable growth. It's a niche segment. I completely agree, and I think it's a business for future. And valuations are fair to reasonable considering the growth that the company is delivering. So I think this has a potential to become, all the ingredients are there to become a multi-bagger stock in next 3 to 5 years, provided I think management integrity is there. But I think it's worth betting risk, taking and investing in this stock from a longer term perspective. I think the stock should deliver handsome returns.
Lancelot, final view on BLS before we wrap up?
Yeah, I think I am a bit neutral because price has also already moved up in anticipation because all the numbers are out. We've seen the growth, and in this kind of business, growth becomes predictable. So you will see the market's pricing that growth in place. So there's not really a great upside unless there is a new contract or there is a new bid that they won, which will actually add further value.
Okay. So you're saying that once a new bid comes in, that is the time.
Then you will get which is a tough call at this point in time.
So I'll also add. Obviously, yes, new contract will drive growth, but the renewable of contract, I think that's the biggest trigger. I think that's the biggest trigger. Why? Certainty of cash flow. I think that's what will drive stock. And this business is going to remain, and for years together, these companies will perform. Yes, they should not fudge around with the service quality and all those things, but I think it's a great business model. Certainty of cash flow is the biggest trigger, and renewal of contracts. So which company has already done, few of the contracts they have already been renewed. So I think that's it is time to give a chance and invest.
Okay, so that's the view that's coming in on the final stock. BLS International, Dharmesh and Umesh are extremely bullish. Lancelot is neutral on it. Before we wrap up on the show, here's a quick recap of all the guest view on the stocks that we've covered till now. Umesh, Dharmesh, Lancelot, thank you so much for joining us on this show. With that, it's a wrap on today's Hot Money. Thanks for watching BloombergQuint.